So in this video, we're going to talk about the bump and run pattern. First of all, we're going to see how you can identify the bump and run pattern on your charts. And after that, I'm going to show you how you can trade it on the charts and how you can take some profit as well. Hey guys, welcome back. So in this video, we're going to talk about the bump and run pattern. First of all, we need to discuss how you can identify the bump and run pattern. So as the name suggests, the bump and run pattern consists of two phases. Okay, the first phase is where the market structure makes a specific structure. Okay, and the second phase is where we take our trade. The first phase is called the bump and the second phase is called the run. So let's discuss the first phase first. If I zoom in here, inside the first phase or the bump phase, what happens is the market should already be moving inside a trend. It can either be a bullish trend or a bearish trend. So in this case here, let's say the market is making these higher highs and higher lows, which means that it's moving in a bullish trend, and the angle of inclination for that trend, if we join these lower higher lows, the angle of inclination would be somewhere around 35 or 45. Okay, so that should be the angle of inclination, which is normally used for trend. So here, this is the normal trend going on, but suddenly what happens is the market gives an impulsive move and the angle of inclination increases suddenly or drastically. And you can see in this case, the angle of inclination changed from this around 45 or 35 to almost 60 or 70. Okay, so this is the sudden change in the trend, which means now the buyers are making some big moves. Okay, they're coming in to the market with big impulsive moves. So after that, here you can see, so these are the two patterns or two structures that you need to determine. First, the market should be moving inside a trend, and after that there should be a sudden change in the angle of inclination of trend, as you can see here. Okay, so this is the bump. Now after we have determined that there is bump in the market and the prior trend is also either bullish or bearish, in this case the prior trend is bullish, so we have successfully determined the first phase. Now comes the second phase, in which we take the trade. So there are two strategies that we can use inside in order to trade the bump and run pattern. The first one is we wait for the market to break this trend line, which is formed by joining these higher lows and extending it. So when the market breaks this trend line, we take the short position and we wait for market to hit the target, and in this case here, our target is usually the beginning of the trend, okay, or beginning of the pattern. So this is the first strategy. In this strategy or in this scenario, the risk to reward ratio is a little bit low. The second strategy or second way we can trade the bump and run pattern is if we zoom in, and here when the market gives the bump, at the end of that bump, what we should do is we should wait for the formation of any candlestick pattern, okay, or any supply or demand zone that we can detect in the past. We also have a supply and demand indicator that you can check. I'll put the link to in the description, which can act as a very good confluence. And here you should wait for a confluence to form that can either be a supply or demand zone or a candlestick pattern. And when you see that forming in the past, okay, or the candlestick pattern on the charts, then you should be good to take the short position that indicates that now market is going to move in the bearish direction. And in that scenario, in the second scenario, we would have two take profits. The first one would be when the market breaks this trend line, and the second take profit would be when the market reaches back to the beginning of that trend, okay, or that pattern. So this would be our first take profit level, this would be our second take profit level. So now let's go towards the charts and see how you can trade this bump and run pattern on the chart. So let me just go down, and here if we zoom in, we can see the formation of these continuous higher highs and higher lows, which means now the market is moving inside a trend. And suddenly what happens is the angle of inclination increases drastically, and here you can see the buyers giving impulsive moves, and from here the prior trend is bullish, but after that a bump is formed. So this is a valid bump, and this is the first phase of the bump and run pattern. Now after detecting this bump, what we do is we trade it as we discussed above. So we can take short position here, or we can wait for this run to continue and break this trend line, okay, which is formed by joining these higher lows. Once it breaks it, what we can do is we can put the short or take the short position here and wait for the price to reach the beginning of this chart pattern, and that would be our take profit level. But if we take entry here, what we can do is we can look for any key level or any supply or demand zone forming here in the past, or any key level or any candlestick pattern that is forming here on the charts that indicates now the market is going to move in the bearish trend, and we can take the short position. So we would put our stop loss few pips above that level or that candlestick pattern, and our take profit, first take profit would be this, the candle where it breaks the trend line, and the second take profit would be the beginning of our chart pattern. Okay, so let me just repeat what we have discussed in this video so far. Let me just go above. First of all, we discussed about what is bump and run pattern, and in that we saw that bump and run pattern consists of two phases. The first one is the bump and second one is the run. The first one is the one which we detect before taking the position, and in this phase there is a prior trend that can either be a bullish trend or a bearish trend, and then there is sudden move or sudden impulsive move in the market. And then the second phase is the run, in which we take our position. And there are two ways we can trade using the bump and run pattern. The first one is we look for the trading opportunity at the end of this bump, or we can also wait for the market to break below this trend line that is formed by joining these high lows, and we take our short position here and target the beginning of this chart pattern. So I hope you guys like this video. If you have any questions, please comment down below. I would love to answer them. Also, don't forget to check the links in the description, and don't forget to subscribe. See you guys in the next video. Thank you.